Welcome to Investago TV's weekly review, your essential source for global economic updates, keeping you informed on the latest market trends and financial insights every single week. Buckle up. Trump spokesman Stephen Chung denied receiving notification of an indictment against the former president while urging supporters to attend a Texas rally for Trump's 2024 re-election campaign. Lawyer Susan Nichelis claimed the Manhattan District Attorney's Office leaked information to the press rather than communicating with Trump's attorneys. As the banking crisis and the Hunter Biden laptop scandal continue, Trump's potential indictment on felony falsification charges could dominate the headlines next week. The Manhattan District Attorney's Office reportedly requested a meeting with law enforcement to discuss security and logistics related to a possible Trump indictment. If charged, Trump would have to surrender to New York authorities and appear in a Manhattan courthouse. President Biden tweeted an incorrect statement claiming that billionaires pay only 3% of their average earnings in taxes. Elon Musk countered that claim, stating that he paid 53% in taxes on the Tesla stock options and more income tax than anyone in history for 2021. Ian Bremmer noted that the 3% figure was far from accurate. A 2021 study revealed that the 400 wealthiest billionaire families paid an average of 8.2% of their income in federal taxes. PolitiFact reported that the top 25 highest earning billionaires pay around 16% in federal taxes, while most teachers and firefighters pay between 0 and 15%. In January 2022, there was a warning of potential disaster resulting from the Fed's aggressive tightening campaign. Recently, a series of bank failures, including the collapse of Credit Suisse, proved the prediction accurate. The Fed has since taken action to improve US dollar liquidity through daily dollar swap lines with major central banks, reminiscent of the post-COVID crisis response. This coordinated effort aims to ease strains in global funding markets and maintain credit supply to households and businesses. The Fed's actions may restore some confidence in the banking sector, although it could also undermine faith in the central bank's ability to manage inflation. Silicon Valley has long enjoyed tech exceptionalism, with companies like Facebook, Amazon, and Google becoming some of the wealthiest corporations in history. However, after a series of market downturns and the collapse of Silicon Valley Bank, the era of tech exceptionalism may be coming to an end. As the US faces increasing competition from China in areas like AI and climate tech, the tech industry must focus on efficiency and innovation to stay alive. This could mean fewer risky ventures and more focus on projects with tangible returns on investment. Banks borrowed a combined of $164.8 billion from two Federal Reserve backstop facilities in the most recent week, indicating escalated funding strains following the failure of Silicon Valley Bank. The Fed data showed a record high of $152.85 billion in borrowing from the discount window and $11.8 billion from the new emergency backstop known as Bank Term Funding Program. The banking system remains fragile as it deals with deposit migration in the aftermath of Silicon Valley Bank and Signature Bank's failures. The emergency loans reversed around half of the balance sheet shrinkage that the Fed achieved since it began quantitative tightening in June last year. That's a wrap for today, and I'll catch you next week. Don't forget to follow us on our social media channels to stay updated. Wishing you continued success on your journey.